All right, what is up, YouTube? I thought I'd do something different this video. So we're gonna go ahead and take a look at my Robinhood portfolio. And we're gonna I'm gonna, give you small tips on how to grow a small account. So let's just go ahead and screen share. And let's get straight into it. Okay. So as you see, my Robinhood account is about just less than $3,000. And as you see, my holdings for Robinhood is we're gonna go through every single one stock. So we're gonna go through Square. My buying price for Square is about 25. That's why I started buying Square. And not to mention, I started to mention, people should get in, positions on Square. Just last year, you did 100% of your money. Also, Apple. Remember, I talked about Apple selling at 125. I got back in on Apple recently, and as you see right here, Apple's definitely rebounding. Take-Two Interactive. Remember, we've mentioned this. I've mentioned this time and time and time again. And as you see, the stock is definitely climbing right back up. This is a video game maker. Remember, we talked about Grand Theft Auto, Rockstar Games, 2K Sports, Berkshire Hathaway, Warren Buffett's company, heavily diversified conglomerate. Whenever you buy a share into this company, XLF. The thing about the XLF, you actually buy into Berkshire Hathaway B-class shares when you do buy into it. So I'm kind of, I kind of have, I would say, a share and a small portion of a share of Berkshire Hathaway with the XLF. But the XLF, we definitely do have banking stocks in here for just $29. Chem Ors, we have this is a chemical play. And as we know, I made a video about chemical plays, a while back. And chemical plays, they grow rapidly. It's just fast growth in this industry. We have Caterpillar. Caterpillar's for the infrastructure play, the construction. Not to mention, Caterpillar was going on an all-time high. Even when they had earnings, the stock just did not want to stop going down leading up to earnings, even after earnings. And what I was waiting for the stock to, take a pause, take a dip, so I can, actually get in a position on this. So that's exactly what happened. The XLY. Thing about the XLY is I actually do have a small portion of an Amazon share in the XLY. So you see these, you see these ETFs. Take a look at this. Do further research on the XLF. Do further research on the XLY, and do some more research on the XLP. This is Cigna. This is definitely a trade. But as you see, my portfolio is definitely heavily diversified. So I'm gonna go towards the trends of the day, the week, 1 month, and we're gonna talk about each and every one. So today, Cigna is kind of carrying me, but at the same time, I'm still taking a loss from Cigna. But Cigna is rebounding. I was not in Cigna, at $200 or $190. I just built my position right there in the mid 170s. I do use Robinhood Gold, so I do have I would say a margin or a leverage portfolio where I can borrow money from my broker and just trade around with it and get and pay a $6 fee. I just trade around with $1,000 extra, and it doesn't show up in the total right here. But if I looked at the account summary, it will show I have $3,800 rather than $2,000. So that's what that means. It's, all this $2,800. That is definitely mine. But as you see from the 1 day, stocks are definitely rallying. The Dow Jones is up over 350 points. NASDAQ definitely rallying. S&P 500 rallying. And I was going to do a video for you guys yesterday to show you this wedge pattern that the S&P and the Dow Jones is definitely showing. But the NASDAQ was the only one that was on the cusp of breaking out. And as you see, the Dow Jones and the S&P 500, they're now breaking out of that wedge, and looks like we might go higher. And that's definitely interesting. So today is just a good day. I didn't really have to make any good moves. As you see, I'm up about $59, 2.6%. So yeah, that's one of the keys to investing. You want to be able to leave your money, just leave your money alone and just let your money work for you. I'm not stressing over what I'm going to trade today. I'm just keeping in touch with the market, seeing exactly, what's my next move after I'm done with Cigna. I want to be looking for my next move. So let's go toward past the 1 week. The 1 week, we see we did about 6% for the 1 week. And this is basically, I had Derm in my portfolio. I'm not sure if you guys are familiar with Derm, but let's go to CNBC.com and let's see where it's at. Blah, 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 blah. Okay, Derm was that stock that fell down over 60%. And Derm was kind of like that stock, you thought was going to rebound, but after a while, it did not rebound at all. So let me go ahead and show you guys the visual here. So you see Durham went from $25 all the way down to eight at the low, and now it's back up to 9. And what made me kind of dump it or kind of, somewhat of breaking even here. But Durham, it really couldn't go anywhere. After it went to 970s, it was, got really irritating. It went to 970, I think, at least 3 times, and the stock fell back down. So I'm not really sure if there are shorts in here, making sure that the stock, has heavy resistance once it gets up to 970. But whenever this stock does break past 970, I think this thing will go to that IPO low of $13, and that'll probably be a 40% of upside. But I'm definitely going to be watching this on a small scope. But on the other hand, that's pretty much why you see the stagnation of growth, and also this kind of stagnation of growth, and you see a dip right there in the portfolio. And I got into Dollar Tree. Dollar Tree was one of the stocks that did fall, I think, over 20%, and the stock rebounded really nicely. Let's go into that, and I'll show you my order for that. But Dollar Tree rebounded really nicely. I bought in at 87, bought some at 88, and the next day the stock turned around, rebounded like that, made me a quick $50 within just a day of holding the stock. So you want to be able to rebound and trade stocks just like this, or swing trade stocks just like this. So I got out in the 92s, and the stock is back at $91. You see the stock hit a 93 high right there and kind of fall right back down. So at some point, the stock will run back up to $100, but just not right now. I'm definitely going to give it some time to cool off and let people settle in on the stock. But the stock is definitely in at a discount. I might reposition myself in once Cigna, kind of rebounds here. I think this thing goes to 185 easily, or maybe goes back to the 190 levels. But people did do a really bad overreaction towards them buying Express Scripts. This is my 1 month. You see, I'm up about 25% for 1 month. You see, made about close to $600 on my 1 month return, and that's basically just getting to the leverage ETFs. When the market did crash, I got into a leverage ETF known as the TQQQ, and just rode that completely just up, and that was pretty much, I would say, 50% of that return came from the TQQQ, just because the Nasdaq was down. I was like, you know what, the Nasdaq always goes up, so let me go ahead and get a share in this. And I think I would have been up about $400 if I just held on to the TQQQ. And whenever they do split the TQQQ, I'm definitely going to build a position in on that. And we go back 3 months. We see right here, and this is just me just chilling in the market, not really stressing over what to trade. And I was like, you know what, let me just go ahead and try to get this Robinhood Gold going. And, after a while, the market was kind of at a euphoric state. And the market just it got really overheated. And that's when we see this big sell-off on Wall Street. And that will kind of made me spur into the moment when I was like, you know what? Let me get back to the basics. Let me recover my account. I want my account to recover to the same levels. Not only do I want to recover for the same levels, I want to build up the account. So that way, when my stock starts to recover, it'll be higher than it was before. So building up to this point right here, my stocks were much higher at this point. So as you see right here, that's what I mean by I want to be able to build my account. I want to put it on a higher step. So that way, when my stocks recover, my account will still be rocketing higher. That's basically what I mean by that. We go back 1 year, $700 for 1 year, 33%. As you see right here, this is just me just coasting. I'm just coasting towards investing, building up different positions in Square, Take-Two Interactive, Berkshire Hathaway, Kim Moore's, and not really looking into different stocks. I did have Starbucks as well. I did have other companies as well, but I've since then dumped those. Gotten back into what I really need to do as an investor and as a trader to actually build my account up. So as you see right here, started with just like roughly $2,000. Now we're at $2,000. And $2,800, basically looking to go past $3,000 somewhere. I'll probably get myself somewhere in between April, and once I get past $3,000, I'll actually deposit more money into the stock or more money into my Robinhood account. So I definitely have to beat certain goals for myself before I actually deposit. So I'm just about really close to meeting that trade or that goal, and I know I'm going to get there really quickly because Take-Two, the all-time high for Take-Two is at 129. Square definitely has more room. Caterpillar, all-time highs at 180 just about. So that's just about $100 close to profit. Just when these things get back, just when these two get back to their all-time highs. So basically, this is what this is what I want you guys to do. I want you to look for ETFs, diversify yourself before you actually get into trading. Once you diversify yourself, then you can start looking to trading. Then you can start to grow your accounts just like this. I know you see these dips right here. This comes with investing in the market. You see November 2017, there was a dip, of course. You see right here as the market. I would say if you look into the Dow Jones, look into the S&P 500, any major index is going to show a huge dip just like this. And then you're going to see a kind of a topping period right there, and the stock will probably be right there. But as you see, my account has now broken out and went higher to what? $2,800, 33% for a 1 year return. That's pretty good. That's beating out all the major indexes out. But you want to have a plan when you start to, when you start to invest, when you start to trade these stocks. You want to have a plan in the market. So that way, just in case the market does crash or the market does go into correction mode, you will always have that go-to play that you know is consistent, that you know is kind of a guarantee or a sure bet that goes back up whenever the market, gets to recover. So T-Triple-Q is definitely one that I'll be looking into. That one you can probably double or triple your money without even having to worry about it. So that's pretty much my portfolio, where I'm going to keep you up to date with, different moves that I'm going to be making rather than keep you up to moves with my TD Ameritrade. But as you see right here, the Robinhood portfolio is up really nicely for, for the 1 year return, just about $1,000. But if we go back for one week, we're about 161. And if we go up today, we're up about $61. So if the market does fall, I do have money I do want to load and get into certain guarantee plays, and it'll just resume just like the normal day, and the market will keep carrying me higher. But I know we are not done with this rally. We have amazing earnings growth with a lot of these companies. You want to get back to the fundamentals of investing. You want to get to the companies that are going to benefit from the tax plan, benefit from different policies Trump is passing or trying to pass, and also you want to look for those companies that are growing their revenue, growing their earnings, really fast, which is a Square type of company. And Robinhood Gold is definitely really interesting to me. I haven't really checked it out much, but you see you got the top movers. You got Wynn Resorts. I did have that. I sold Wynn Resorts about 176-ish. Now the stock is getting back up to those $200 levels. And I've said before, Wynn Resorts is a $200 stock. Before the CEO stepped down, but you see it's definitely trying to recover itself. But I just want to show you guys my portfolio, and if you have any questions on what you should buy or what stocks you're looking at, let me take a look at it. Let me see if it's worth my time, worth your time before you actually put your money into it. So as you see right here, my portfolio is up at about $61, 2.2%. I'm straight. I don't even have to, worry about trading anything. I'm not really looking for a hectic day. I'm not going to force any moves. I'm just letting my account carry me higher. And if there's a play that I would like to play, I'm definitely going to get in on it. But that's all I have for you guys. I just want to show you my portfolio. So take care.